Holy crap. If you guys are viewers of this channel, you know that I was calling for a 5 to 6% drop in the Russell by the end of this week. That was on Wednesday. So roughly 2 trading days. From the high of Powell's speech until today, you have dropped 9%. This is just getting insane. Now, here in this video, we will be going over all of your Tesla stock news. There is some pretty significant news. Elon Musk is having some great things to say about Tesla over on X. But the big story is really what's going on in our markets, okay? We got our non-farm payrolls. We got our unemployment rate. And we need to talk because everything just changed. Tesla stock is down about 4% at the time of recording this video. And before we get into your Tesla news, option activity, sentiment, all of that, let's give a overview of what's going on in our markets today. And let me just tell you one word to describe this: panic. Wall Street has for so long been beating the hammer of a soft landing. It became so consensus to be in the soft landing camp, or no landing camp for that matter, that recession wasn't even on anyone's radar. It wasn't. And now today, it is. It has to be. And a lot of Wall Street was not ready for this kind of selling. This data that we got this morning was just outright terrible. So it all starts with non-farm payrolls. We came in at 114,000 job ads for the month of July. We were expecting around 175,000 job ads. Now, last month was also revised lower, 29,000 jobs, from 206,000 down to 179,000. So last month was a little bit worse than we thought. And this month just came in way lower than expected. And as I said in the last video, anything really under 130,000 jobs was likely going to be seen as negative for markets. Now, keep in mind, back in April, we had 108,000 job ads, and then you spiked again, and now you're coming back down. So this is not the lowest non-farm payrolls that you've actually seen within the last year. It's the unemployment rate that is causing the pain today. The unemployment rate was expected to come in at 4.1%. You came in at 4.3%. Now, what a lot of people don't fully appreciate or realize is when you start to get weakening in the labor market, it is very hard to stop. Much the same as inflation that is starting to spiral out of control. When the labor market starts to spiral, it's very, very hard to control. It's pretty much impossible to control. The Fed cutting rates does not stop the unemployment rate spiral. And that's why usually when the Fed cuts, you actually get pain, is because usually it's already far too late by the time the unemployment rate starts to rise. So this was the biggest jump we have seen in unemployment in a long time. And as you can see from Liz Young Thomas on X, the SOM rule recession indicator triggered in July. Fed Jerome Powell said it's not an economic rule, but a statistical regularity. In any event, here we are. And basically what the SOM rule is, defined here, calculated as the 3-month moving average of the unemployment rate minus its low from the prior 12 months. Historically, recessions have been correlated with this measure rising above 50 points, and you are now above 50 points. But what this is really showing you is momentum of the unemployment rate. So momentum has really started to hit that inflection level in the unemployment rate, where when it usually hits this level, you see rapid rises. The SOM rule is unlike the inverted yield curve. It's unlike a lot of different rules or statistical regularities, as Jerome Powell would say. This one has never been false before. It has a 100% track record of predicting a recession, or actually telling you you're in a recession or very shortly going into a recession. So this is one of the rules that everyone on Wall Street is starting to wake up to, and they're starting to go, oh crap, Are we going into a recession? And again, this has been so far off of anyone's radar on Wall Street that it's kind of a slap in the face. Because again, today, like many other instances over the past 12, 24 months, nobody, as far as economists, forecasted this. Nobody was expecting the unemployment rate was going to go to 4.3%. So economists got it wrong yet again. And if you're a Wall Street analyst or investment manager that, follows consensus, you were wrong again. And for the S&P 500, for the NASDAQ, and a lot of sectors in our markets that are still trading, well above your 2021 highs. If you're looking at the highs of 2021, you're still up 14.5% on the S&P after this drop that you've seen in the S&P. There's still a lot of room to price in a recession here, and that's what is a little concerning to me. Now, you can see today the VIX is up 58%. It is up $11, let's call it dollars, today alone. You are now seeing a VIX at 29.4. The Russell 2000 is down 4.24%. The NASDAQ is down 3%. The S&P is down 2.63%. And the Dow is down 2.36%. This is panic, unlike anything you have seen in a very long time. In fact, the markets are now pricing in a 50 basis point rate cut coming September 18th. With a 62% probability. There is a 38% probability of only one cut by September. So markets are now expecting a 50 basis point cut in September. That's wild. Liz Young Thomas on X says, what a difference 2 days makes. Markets now pricing in a 75 to 80% probability of a 50 basis point cut in September, with 4 to 5 cuts now priced in by the end of this year. And again, this is not just normalization, taking some restriction out of the economy. 4 to 5 cuts in the next 4 months is pricing in recession. Now, yes, I do think you have a long way to fall before we're actually pricing in a recession or before we're actually in a recession, but this is the first inning. You are in inning number 1 as far as pricing in a recession or a recession itself. But we'll talk about this a little bit more in depth, as well as a potential emergency cut in the next video, so stay tuned to the channel for that. Coming out at 8 p.m. tonight, and you're going to want to grab yourself a drink for that video. I'll just tell you now. But again, congratulations to anyone that hit some of those Russell trades that I had called out in the trading community. Those were thousands of % winners. Those were some huge trades. So congratulations to you guys, or just anyone that heeded my warning about the Russell that actually proved to be a little conservative, which some people thought that call was crazy, but in fact, it was a little conservative compared to what we got. Nonetheless, CNN's fear and greed indicator has now flipped to barely in extreme fear territory. So you're very fearful. Extreme fear, you're barely there. You're at 25. So technically, that's where you're categorized, but I wouldn't say we're quite at extreme fear levels. I think the markets are still a little too high to say we're extremely fearful, and there's too many people that are still somewhat bullish, like Tom Lee and some individuals, which who knows if he will even turn to being a little bit on the bear side. To be continued on that. But yesterday you were sitting at 39, which was fear. So this is a huge drop from yesterday. Market momentum is in fear territory. Stock price strength, extreme greed. Stock price breadth is neutral. Put and call options, extreme fear. Market volatility, extreme fear. Just look at this skyrocketing of the VIX. That's insane. From 16 on July 31st to almost 30 today. That's one of the most violent rallies you have seen in the VIX in your lifetime. Okay, that's just a crazy move, and that's just telling you that everyone's going out and buying puts today. that people are selling out of calls, because the VIX monitors or measures the put to call ratio on the S&P 500. So when the VIX is low, that means there's a lot more calls than puts. That's where we have been for really the last year or so, and the VIX has not spiked at all, relative to this. And now you're seeing this big spike. That means there's a lot more puts being bought now than calls, and I would say rightfully so. Nonetheless, safe haven demand is extreme fear, and junk bond demand is extreme fear as well. There is a lot of talk today as well about the 2- and 10-year yield curve inversion that is uninverting 11 basis points today. So now you're only inverted 7 basis points, and this is the least inverted you have been on the yield curve since the yield curve inverted. Which the yield curve uninverting is another one of those signals that some investors like to use to signal a recession is coming soon. But really what the yield curve uninverting just means is the Fed is about to cut rates. And with that said, Tesla stock, as I expected, is now down to that 50-day moving average at $208.49 per share. You're actually about 40 cents higher than that at the time of recording this video. So I am expecting support to come in around this 50-day moving average for anyone that was curious. I said this in the last video that if the selling got really bad, then you can target that 50-day moving average, and that's where I would expect a lot of support to come in. So from that standpoint, it's likely that we do see a bounce for Tesla. I do think it is likely we see a bounce for the markets as well to some extent. Some sideways trading action potentially. Yes, we do still have a lot of gains. Even for 2024, you're still up a lot, but earnings did come out okay. And some people are trying to justify the unemployment rate rising like it is. But again, this is just a taste of what we can expect to see over the next coming months. Again, you've basically just went down in a straight line, especially for the Russell. Markets usually don't just go down in a straight line. There tends to be a lot of up and down volatility, even, in crashing markets like 2022 for that matter. You've seen a lot of straight down moves, a lot of straight up moves, and that's similarly what I'm going to expect going ahead over the next couple of months. Now, we will have a lot more to say on this in the next video, so stay tuned to the channel for that one. Again, especially surrounding a potential emergency rate cut, because there's quite a few individuals on Wall Street starting to talk about that. And honestly, I think it's kind of likely, or at least not super unlikely. So we'll talk about that more in the next video coming out at 8 p.m. tonight. Let's get into some of your Tesla stock news today. So first up, I want to share with you what Elon Musk just said to James Stephenson's post. He says Tesla has broken their all-time quarterly revenue record 25 times over the past 10 years, including the most recent quarter and twice last year. Elon Musk comments and says long term it will get super nutty. Also, starting last night, Tesla is offering a loan rate of 1.99% APR in the US for new Model 3 long range, rear wheel drive, all wheel drive, and performance trim financing orders on 36 to 72 month loan terms. Applies to new orders placed between August 31st, 2024 and delivered by September 30th. 2024. This does exclude the Model 3 rear wheel drive. Washington State has launched a new EV rebate program to help low-income residents lease or purchase EVs. Eligible buyers can get up to $9,000 off a new 36-month EV lease or $5,000 off a direct purchase. This is in addition to the $7,500 federal EV credit. Even for used EVs, if you purchase or get a 2-year lease, that's $2,500 off, and a 3-year plus lease is $2,500 off as well. This applies for anyone earning less than $45,180 a year for a single person, or less than $93,600 for a family of 4. And the program will run through June of 2025 or until the funds run out. Tesla's manufacturing X account says every 5 seconds we welcome a new drive unit into the world. Elon Musk shares this and says one day Tesla will make a drivetrain per second. So Elon Musk potentially forecasting 5 times faster production or 5 times more production that could be coming down the line. It would put you at about 10 million vehicles annually. China founded, quote, Tesla insurance brokerage, and Tom Zhu became CEO and chairman of the board of directors. As Sawyer Merritt says, in a historic first, the accumulated capacity of wind and solar projects in China has overtaken coal for the first time, and solar capacity alone is predicted to overtake coal within 2 years. And you know what that means? We need more Megapacks. And that's probably the reason that Tesla is building the new Megapack factory in Shanghai. Tesla's Giga Shanghai reported 74,117 wholesale units in July, the highest month since March and the second best start to the quarter ever. Only Q2 2023 was slightly higher. And Sawyer Merritt here post an article from Reuters that gives us a little bit more insight to this insurance endeavor over in China. This Reuters article, keep in mind it's Reuters, it says Tesla registered an insurance brokerage firm in China at the end of July based on a national corporate information database, in a sign that it may be trying again to gain approval to sell insurance products in the country. As far as institutional option activity for Tesla via the interesting flow sentiment over on Ortex, you have seen 11 different trades totaling $2.08 million with a positive order value of 62%. Tesla's short interest of free flow is sitting at 3.76%. You do have $22.64 billion currently sold short in Tesla, totaling 104.39 million shares. It looks like today you have return shares, potentially covered shares, 176,000, and borrowed shares of 363,000. So it does look like potentially as high as 190,000 shares are actually being sold short today. And what's actually pretty dang surprising to me is the sentiment over on StockTwits is actually bullish today at 61 for Tesla. Yesterday you were neutral at 52. So now as Tesla is starting to get down to these lower 200s, you're starting to get more retail that seems to be getting bullish on Tesla. Again, message volume today is higher than it was yesterday. Yesterday it was normal at 45. Today it's normal at 50. And the participation ratio today is normal at 54. Full trends data for the Tesla lineup shows the Cybertruck taking a move lower from 77 down to 65. The Model Y going from 28 to 26. Although I do expect this will start to ramp up and you'll start to get more attention for the Model Y and the Model 3 over the next coming days as Tesla has started this new promotion. The Model 3 has went from 24 to 23. Again, I'm expecting that's going to ramp up quite a bit. The Model S went from 10 to 9, and the Model X went from 9 to 8. So a little bit of a deceleration for your Google Trends data, but this data is not finalized yet. And Google Trends data for FSD is showing a number of 21. The last week's data we had shows a number of 22. So some elevated search trend activity still persists for FSD, which is a good thing. Tesla is currently in still running 4,000 different ads with Google. Tesla's global inventory numbers, while they have risen recently, they're starting to fall at least a little bit today. The Model Y is down about 300 units today to 6,600. The Model 3 is down about 100 today to 5,500. The Model X is going higher to about 3,600, and the Model S is sitting at about 2,700. 10-year Treasury yields today are down to 3.81%, just outright plummeting, down 16 basis points. That's a wicked move for a one-day period. But that's really a testament to what I've said many times here on this channel. You guys are going to be familiar with this. Rate cuts really don't matter. The reason why the Fed is cutting rates matters. If the Fed is cutting because the economy is okay and there's no recession, great, that's good news. If the Fed starts cutting because it looks like we're going into a recession, that's bad news. And you're seeing the second there. The Fed looks to be cutting. The markets are telling the Fed they're going to be cutting 50 basis points in September, not because inflation is falling, that's part of it, but mainly because recession risks are rising dramatically. So we will talk about this more in the next video. That's going to do it for this one. Hit the like button as well as subscribe to the channel. If If you guys want to come join the trading community with us, check out that link down below in the description of this video. Can't guarantee ever you will make money. You take your own risk if you trade anything that I trade, but so far so good, and in the last couple of days have been just absolutely insane for those trades. So come join us if you have not already. Thank you guys, those of you guys that do put the super thanks on these videos. Almost every video there's at least one of them. Do appreciate you guys, and I do respond to all of those super thanks. Just as a little heads up, you can always ask questions or anything specific with those. So nonetheless, guys, enjoy the rest of your day, and I will see you in the next one.